Is what's happening in the markets an official correction? Do we have a bear market? And is the U.S. economy officially in recession? Joining me now from Puerto Rico, CEO and Chief Global Strategist for Euro Pacific Capital, Peter Schiff. Peter, let's start with the bear market. We have some indicators that tell us whether we're in a bear market or not. You can look at stocks going down. Some people would say we're in a bear market. I think interest rates is one of them. Inflation, we have higher interest rates, of course, at least a little bit. You look at inflation as well. You look at overvaluation. Do we have the indicators right now of a bear market?
Well, sure. I think not only are we in a bear market in stocks, I think we're in a recession economically. You know, when you played the clip from President Obama's State of the Union, you know, when he talked about people peddling fiction, I thought he was talking about me. But, you know, I'm the one that's selling reality. He's peddling a bill of goods, trying to pretend that this recovery is real. But whatever it was, it's over. And I think the recession that we're in now is going to be longer and deeper than the Great Recession of 2008, 2009. And of course, all bear markets begin as corrections, but they don't officially call it a bear market until it's down 20%. And, you know, the Russell 2000 is down 25%. The Dow Transports are down 30%. Many individual sectors and stocks are down a lot more than 20%. And so it sure feels like a bear market, even though officially Wall Street hasn't declared it a bear market. But if the Fed doesn't come up with a QE4, which I think it's going to do, I think it's a mistake. They shouldn't do it. They shouldn't have done 1, 2, and 3. But the only way to stop an official bear market will be for the Fed to reverse course, reduce rates, and launch another round of QE. That's it.
Okay, you said a lot there. I want to peel back the onion just a little bit. Let's go back to the economy and the indicators there that tell you that we are in recession. Of course, the auto industry seems to be doing okay. Housing, consumer spending, that seems to be okay. But employment remains anemic, and the underemployment rate, of course, is underreported.
Yeah, well, first of all, the auto market only did well because of another bubble. We had massive credit extended to uncreditworthy borrowers. I think that auto bubble has already bust, and I think that, you know, we're going to start to see a contraction in auto sales. I think we're going to see a lot of layoffs this year in the automobile industry, in the parts industry. You already have huge inventories that dealers can no longer sell, so that bubble has burst. The housing market is also a problem. You know, home ownership is near a 50-year low. It was mainly speculators who are buying out these houses to rent. But, you know, rents are going up. And I think a lot of people are going to lose their jobs in this recession. And, yeah, I mean, the jobs we have been creating, by and large, have been low-paying jobs. They're mostly part-time jobs or temporary jobs. You know, most of the jobs that we've been creating are for people who already have jobs. They're people taking second and third jobs. And they don't want these jobs. They'd rather have one good job, but they're having to settle for 3 lousy jobs.
Okay, so the underemployment rate is in double digits, and of course the labor participation rate is at its lowest level possibly since they've been keeping records. The Federal Reserve and Janet Yellen, you mentioned her, of course. Do you believe that in this election year and this final year of the Obama presidency, she's going to do all she can, that she believes in her textbook mind, to keep this country out of official recession?
Yes, I mean, I think she wants to elect Hillary Clinton. She doesn't want to hand the White House over to Republicans or Donald Trump. And I think she doesn't want to have happen to Hillary what happened to John McCain. You know, when, you know, the wheels came off the bus during the last year of the Bush administration, a Republican had no chance. And, you know, Obama's whole claim to fame is that he inherited a disaster and now everything is great. The truth is he inherited a disaster, and now it's a bigger disaster.
Right.
But he doesn't want the voters to know that in November. And I think Janet Yellen is a team player. I think she looks at herself as a member of the Obama administration. She is a very partisan liberal Democrat, and she doesn't want this thing to collapse until the election is over. Now, I don't know if she's going to succeed. I think she's going to try, though.
Okay, so when you say try, does that mean that on the heels of raising interest rates slightly, she's going to drop interest rates slightly? And does that mean another round of quantitative easing?
That's exactly what it means. And, you know, the reason that for so long I was forecasting that the Fed would not raise rates at all is because I gave the Fed too much credit. I thought the Fed would understand how foolish they would look and how much credibility they would lose if they raised rates and then had to reduce them back to zero and launch another round of QE. Because I always said if the Fed raised rates once, that would be the only time they did it, because the next thing they would do would be an ease, because I said if the Fed raised rates, they would prick their own bubble, the stock market would tank, and that's exactly what's happened.
Okay, China. I want to bring that in here real quick. We hear a lot of people say, oh, all this is because of China's economy. That's not true, is it? In fact,
No.
that China's economy would affect, of course, our exports, but other than that, maybe the monetary issue, but there isn't much there, is there?
And it's not like we even export much to China. We mainly import from China, and we borrow a lot of money from China. But China is not the cause. Neither is falling oil prices. These problems are made in America. They're one of the few things that actually are. But nobody wants to admit that. So we want to come up with ways to rationalize what's happening, to say, oh, there's nothing wrong here. We're only reacting to the problems in other countries. The truth is the Chinese market is more likely going down because of what's happening over here than we're going down because of what's happening over there.
Okay, I want you to finish this sentence, Peter. If Janet Yellen does the opposite and she happens to want to raise interest rates again, then what happens?
Well, then the bear market is going to continue. And it's going to be even harder for the president to get reelected because the stock market will keep falling. So the reverse wealth effect is going to come into play. And we're still going to be in a recession. But if the Fed waits till the official knowledge of a recession, right, because you have to have 2 negative quarters.
Right.
I think the fourth quarter of last year might be negative, but it might be slightly positive. And so if the recession doesn't begin until this quarter and we have to wait till 7 months before the Fed admits we're in a recession, you know how deep it's going to be by then? And of course, there'll be no time to try to stimulate before the November election. So I think she only has a few more months to act. What the Fed is trying to do now is come up with a face-saving excuse so they can try to blame it on some unforeseen event because, you know, they just blessed the recovery. They said everything was great and they were data dependent. And after 7 years, they finally raised rates. If it turns out that they waited until we were in a recession to raise them, I mean, how incompetent do they look?
Okay, Peter. Well, the fact that you're not on the continental United States and you're in Puerto Rico, I hope isn't a sign that you see some sort of financial Armageddon coming. Thanks again.